If the United States ever stopped paying its bills, even for a moment, the global economy wouldn't gradually decline. It would snap not in weeks, not in days, but in hours. Banks would lock up. Trading screens would go dark. The dollar, the currency the world has trusted for 8 decades, would suddenly feel like a story no one believes anymore. Welcome back to The Financial Historian, where money, power, and history aren't separate forces. They're the same force wearing different masks. Because what we casually call US debt isn't a tab waiting to be paid. It's the load-bearing beam of the entire modern financial world. Remove it, even slightly, and the whole structure doesn't wobble, it collapses. But to understand how fragile this system really is, we need to go back to the beginning. Back to when the United States learned the most important lesson in finance. Trust is more valuable than gold. In 1790, America was a young, broke nation. The revolution had been won, but at a cost no one could pay. Soldiers, farmers, foreign allies, everyone was owed money. Most countries in that situation simply defaulted. They admitted defeat, but Alexander Hamilton didn't. He saw debt not as a burden, but as a ladder. If America could borrow and repay consistently, it would build a reputation stronger than any army. A nation that kept its promises would become the safest place for money to live. So, the US began issuing bonds. Simple promises backed by a government that barely existed. But they paid, and people noticed. In Europe, American bonds became something rare. A revolutionary country that actually honored its IOUs. That was the beginning of the American financial empire. A nation built on credibility. For the next century and a half, every major turning point, railroads, factories, the New Deal, World War II, was funded by borrowing. The country grew not by saving, but by convincing the world that its promises were unbreakable. Then came 1944, Bretton Woods. 44 nations met to decide how money would work after the war. Their solution was simple. Tie everything to the US dollar, and tie the dollar to gold. But the real anchor wasn't gold. It was the promise that America would pay what it owed. After World War II, the US held most of the world's gold, most of its industry, and almost all of its trust. Nations began holding dollars as reserves. When they needed safety, they bought US debt. American IOUs became the world's savings account. But nothing in finance stays stable forever. By the late 1960s, the Vietnam War and huge domestic spending pushed the US into a bind. Dollars were flowing out of the country faster than gold could back them. Countries started demanding gold instead of paper. So in 1971, Richard Nixon made a decision that changed money forever. He ended the dollar S, linked to gold. Overnight, money was no longer backed by anything physical. Its value came from one thing: confidence. And the US debt became the core of that confidence. The ultimate guarantee. This created the system we live under today. The debt standard. The world no longer trusted gold. It trusted US Treasuries. Banks used them as collateral. Pension funds used them for safety. Central banks used them as reserves. Every financial product, from mortgages to derivatives, is built on top of US debt, which means one thing: the US can never stop borrowing. It must constantly roll over old bonds with new ones. The system doesn't run on repayment, it runs on renewal. But if that renewal ever breaks down, if a bond payment is missed, even by accident, the illusion holding the system together evaporates instantly. And this isn't theoretical. It's happened in miniature before. In 1979, a small technical error delayed some Treasury payments. The impact lasted 4 years. In 2011, Washington nearly defaulted during a political standoff. The US credit rating was downgraded for the first time ever. Markets lost trillions. Those weren't financial events. They were psychological earthquakes. The world realized how fragile the system really is. And now, in the 2020s, the cracks are widening. Interest payments on the US debt are nearing $1 trillion a year, more than the country spends on its military. Foreign nations like China, Japan, and Saudi Arabia are quietly reducing their holdings of US debt. Central banks are buying gold again. New trade systems from Asia to Latin America are emerging without the dollar. For the first time in generations, the world is preparing for the possibility that the American promise isn't eternal. And here's the twist. The danger isn't that the US can't pay. It can. The danger is that politics might stop it from paying. If a debt ceiling fight freezes payments, the result is indistinguishable from a true default. Markets don't care if it's intentional, accidental, or political. A missed payment is a missed payment. And here's what happens next. In the first hour, the Treasury market, the deepest, most liquid market in the world, freezes. Suddenly, the risk-free asset is risky. Banks don't know what their collateral is worth. Lending stops instantly. Stocks crash, not because companies suddenly fail, but because the foundation of their valuation disappears. Foreign central banks holding trillions in US debt would panic. They'd dump dollars to protect themselves. The dollar would plunge. Gold, euros, and even crypto would surge. Interest rates would explode. Mortgages, car loans, business debt. Everything would jump. The US government would struggle to pay salaries, benefits, and basic obligations. Within days, the world economy would go into cardiac arrest. But the deeper crisis wouldn't be financial, it would be spiritual. Because money only works when people believe it works. Rome learned that. Britain learned that. Every empire learns it eventually. Currencies outlast wars, revolutions, pandemics, until one day, they don't. Not because the metal disappears, but because the trust does. If the US defaulted, the collapse wouldn't begin in the streets. It would begin in spreadsheets, trading desks, and quiet emergency phone calls between central bankers. Then it would spill into pensions, payrolls, and imports. Countries would begin detaching from the dollar simply to survive. Some imagine China or Europe stepping in, but reserve currencies aren't chosen. They're earned. Trust takes decades to build, and seconds to lose. The world wouldn't suddenly adopt a new leader. It would fall into chaos. Every trade, every loan, every investment would become more expensive because no one knows what anything is worth. That's what a US default really means. Not the end of money, but the end of meaning. And here's the darkest irony. America could avoid all of this with one vote. One signature. One moment of political cooperation. The US can pay its bills. It just needs to allow itself to do it. But each showdown, each crisis, each threat chips away at the world's faith. Slowly. Quietly. And when faith is the foundation of your empire, every chip counts. Because the truth is simple. The world doesn't run on the dollar. It runs on trust in the dollar. And trust is the one currency no nation, not even the United States, can print.